I'm dead serious. Hundreds of traders saying things like, "Why didn't my setup work? Why did it reverse as soon as I entered? Why do I keep losing even when I follow the rules?" And here's the crazy part. These messages all revolve around the same 10 mistakes repeated by thousands of traders, whether they're in Forex, crypto, stocks, indices, or any other market. And today, we're ending that cycle. In this lesson, you're getting a complete breakdown of the 10 most destructive trading mistakes and the exact steps to fix them permanently. If you're serious about becoming a consistent trader, watch this entire video. Let's dive in. Welcome to Quality Capsule, the place where we simplify the complex world of trading so you can grow faster, learn smarter, and avoid the mistakes the market punishes the hardest. Here's a fact most people don't like to hear. 90% of traders lose money, but they don't lose because of the market. They lose because of their decisions. The problem is not your strategy, your broker, your chart colors, or your indicator settings. The real problem is that you're repeating mistakes that millions of traders have made before you. So today we're fixing them, not the strategy, not the market. Let's start with the most common one. Mistake 1, entering the market. Way too late. This one alone destroys more accounts than any other mistake. Here's how it usually happens. A clean trend begins. The market breaks structure. Momentum is strong. The 200 EMA is clearly respected. Everything lines up. But you hesitate. You doubt yourself. You wait for confirmation. And by the time you finally enter, the move is already 80% finished. Example, your USD drops 120 pips in a clean downtrend. You miss the first 2 perfect entries. Then you jump in on a tiny pullback, and the market reverses instantly. Why? Because smart money is exiting when you're entering. Golden rule, if you miss the first clean break and retest, the move is gone. Stop chasing. Wait for the next opportunity. Chasing hacks losing. Mistake 2, trading divergence. Before a trendline break, let me be very clear. Divergence is not a reversal signal. Divergence is a warning, not an entry. Example, price makes lower lows. RSI makes higher lows. You think, this is the bottom. But price is still below the trend line. Structure is still bearish. Volume is still flowing with the trend. The result? You buy too early. And the downtrend continues. Divergence only becomes relevant after 1 trendline break, 2, retest 3, confirmation candle. Only then does the reversal have structure behind it. Mistake 3, trading without a stop loss. This mistake doesn't just hurt new traders, it ends their careers. When you trade without a stop loss, you're not leaving room for market breathing. You're leaving room for disaster. Markets can spike during news, during liquidity grabs, during session openings, during algorithmic sweeps. One spike can wipe out your entire account. Simple example, you risk 10% per trade. You lose 10 trades, you're down 65%. You risk 50% with no stop loss. 1 large candle, account blown. Protect yourself. Stop loss, survival. Survival sucks long-term consistency. Mistake 4, starting with too much money. Most new traders believe a big account. Watch your fast success. Wrong. Your first account is not for making money. Your first account is for learning emotions. A $3,000 loss can break you emotionally. A $20 loss teaches you the same lesson without killing your motivation. Example, a beginner starts with $5,000. First trade loses $300. Second trade, revenge trades, loses $700. Confidence destroyed. Account nearly gone. Start small. Learn cheaply. Grow smart. Mistake 5, using too many indicators. A chart full of indicators is a sign of a trader who doesn't trust their own analysis. You don't need 5 momentum indicators, 4 moving averages, 3 oscillators, 2 volume tools. Most indicators repeat the same information. Example, RSI, MACD, and stochastics all show momentum, but new traders use all 3 and get conflicting signals. Clean charts reveal structure, liquidity, breaks, pullbacks, market behavior, clarity wins, confusion loses. Mistake 6. Changing strategy rules before mastery. This happens all day long. A trader sees a strategy online with clear rules. They try it once, lose, then immediately start modifying everything. Let me change the time frame. Let me add 5 more indicators. Let me remove the stop loss. Let me increase the risk reward. They destroy the strategy before even understanding it. Example, you backtest a 1.2 RR strategy. It wins long term, but you force 1.10 because you saw someone on TikTok do it. Suddenly, the strategy dies. Master the system before you modify it. Mistake 7. Expecting to get rich fast. This is the mindset that ruins traders. Trading is not a shortcut to wealth. Trading is a skill, just like surgery, programming, athletics, music, design. You don't become elite in a few weeks. Example, a new trader wants to quit their job in 3 months. Instead of learning, they over-leverage. Instead of growing slowly, they gamble. Their account evaporates. The market punishes rushers. It rewards learners. Mistake 8. Not journaling or testing your strategy. If you don't track your trades, you're trading blind. Journaling shows you your strengths, your weaknesses, your winning setups, your losing habits, your emotional patterns. Example, you think you trade well during London session. Your journal says you lose 70% of your London trades, but win 80% during New York. You'd never know that without a journal. Data, structure discipline. Discipline, structure profitability. Mistake 9. Abandoning a strategy after one loss. Every profitable strategy has losing streaks. Let me repeat that. Every profitable strategy loses. Even the best systems lose. 3 times in a row, 5 times a week, 40% of the month. That's normal. The problem is that new traders quit too early. Example, you test a strategy. It loses 3 times. You abandon it. But if you tested 100 trades, you'd see it wins 60% overall. Consistency comes from sticking to a system long enough for the probabilities to play out. Mistake 10. Giving up too soon. This is the saddest mistake because most traders quit right before their breakthrough. You're not failing because you're bad. You're failing because you're still learning. Every trader who is profitable today lost money, made mistakes, blew accounts, felt confused, wanted to quit, but they didn't. Example, a child falls 50 times before learning to walk. No one calls them a failure. They just haven't mastered it yet. That's trading. Stay patient. Stay consistent. Your time is coming. If you want to develop real trading skill, not shortcuts or hype, I've built a full library of content on trading psychology, risk management, journaling, and market structure, all designed to help you grow smarter, faster, and more confidently. Tap into the next lesson right here. It'll build on what you learned today. And if this helped you, subscribe and become part of the Quality Capsule community. This is where traders learn the right way, the sustainable way. See you in the next video.